right? But we're going to deal with that, in a few weeks in the property special. And I just wanted to, in the short story, I've just got lots of stuff there about the war. And again, just reiterating, I've got there Australia buys $7 million worth of US missiles, right, for the greatest arms race since World War II. Now, I can tell you this week, which you'll hear next week, Australia has spent $21 billion buying missiles. Building long-range missiles. I don't, if Australia came out and said, listen, we're going to spend $21 billion on XYZ, most people would go, oh my God, but we've spent $21 billion on missiles and crickets.
Yeah. Not a boo.
Well, if you're my enemy and you build long-range missiles, guess what I'm going to be doing? Yeah. Right? That's the way it works. And that's why I'm saying this war stuff is really, really serious because it's changing the whole pattern of the way we've operated over the last 30 or 40 years.
Yeah. It's making people have more jobs though, spending 21 bill.
Someone's going to be making money out of it.
Oh, actually, I won't tell the story. I won't tell the story. I'll tell it next time. What's next? Chart of the week.
Chart of the week.
When bonds yield more than stocks, it means stock investors are taking large risks.
Yes.
For a little reward.
There's a study out called and I put it in the newsletter a while ago, called it's a terrible name, the Bond Stock Earnings Yield Differential. And what he's saying is in that chart, what you have to do when you invest is you have to think about risk. Now, if I said to you, Tom, you put your money in a bank and I will give you 5%, right, which is generally what you can get now. If I said to you, Tom, you can invest in stocks and you can get maybe 6%, you quite rightly would say, well, hang on, Steve, if I have a potential, if I have a situation where I might potentially lose money, well, I want to be compensated for that. And I want 8%. And if I say, Tom, I'll give you 6, well, quite rightly, you should say, actually, I'll stick with bonds at 5. And then when you come back, Steve, and go, market's crashed, I'll pay you, Tom, I'll pay you 10. You go, okay, now I'll take the risk, right? And it's the difference between the yields. That's all it is, right? Stocks are currently yielding about 3.5. Bonds are yielding about 4.